Okay, so today we're going to talk about some of Nationwide's, especially non-med based solutions for you amidst everything going on with COVID-19 and things. We're going to start with this long-term care product that they have, their hybrid product. So I have Joe Roderer here with me. This is Elizabeth Kuzmiter, one of the sales directors with Elite Marketing. And Joe is our regional specialist with Nationwide. So we're going to go through and start with their Carematters 2 product. So the gist of this, at least this example here, I'm going to give you a few like sales side components, and then he'll talk the technical parts. So this example that we're going to show you is an actual, illustration for a client, 55-year-old female, based here in Texas. She is putting in $100,000 into this product as a single pay. So the page I like to show a client, if you have this in front of them, is just starting with the simple example here. She's putting in a single premium one time. She's getting the added benefit. They did 4 years on top of the original 2. The base product always has 2. So Joe, they can add 4, 5, up to 7.
Yeah, anywhere from 2 to 7. Yep.
Okay. All right. So they can pick exactly how they want that. And then this has an inflation rider built on it. So day 1, this client has up to $5,000 of income. And then at age 80, that inflation rider is increasing it up to $10,000. This inflation rider is 3% compounding. They have 3% compounding, 3% fixed, and then 5% is also compounding, Joe?
Yes.
Yeah. Okay. So the way that I like to, at least on the sales side, explain this product to a client, again, this doesn't require a medical exam. So if they have the asset that they can look at moving over amidst all of this coronavirus stuff going on, they don't have to worry about a medical exam unless there's something going on in their health background that triggers it with an underwriter, but it does start non-med. And the way I like to work with a client on this is talk about, how long did their parents live and what kind of health statuses did they have to kind of give them a real life picture of it. And then try to help work with their financial advisor, or if you are their financial advisor, figure out what the gap is in their assets that they're going to be, collecting at the time of, let's say 80, 90. Usually the client has an idea of when, based on a parent family history, something might happen. So you'll see that inflation rider here increasing the long-term care benefit that this product has, so that by the time they're age 80, they've got $10,000 a month for 6 years coming to them. These prices lock in based on when they're activated. And then up to, age 90, I was working with a woman. She was very adamant. Her mom didn't start any long-term care until she was in her 90s. So she really wanted to know what those numbers would look like. So this is a great product to really give the client security, and they know, based on an age that they have X income for that amount of time. It does have a small death benefit, a guaranteed death benefit based on, if they use up even all of the long-term care, there's still a small residual death benefit. And then the guaranteed death benefit, if they don't use it, is their money back plus a little bit. So Joe, any other technical components you want to talk about with this?
Yeah. So I will. Thanks, Elizabeth. So these products are positioned as asset repositioning, right? So if you really break down the 3 offerings in LTC, you think of standalone, which is your traditional LTC policies. You've got life with the long-term care rider, which is really an acceleration of the death benefit, which we also offer, and then these linked benefit or hybrid-based products. One of the biggest reasons that Elizabeth and I are talking about it today is because of the underwriting process, which I'll talk about in a minute, about the simplified features of that. Elizabeth really hit the nail on the head with all the components with it. There's a lot of flexibility with payment structures, with benefit durations, inflation, et cetera, et cetera. As to piggyback off of what she said, I think these are beneficial for a group that really is planning to focus on their long-term care needs. There is offerings out there, like I talked about, for life insurance, right? Life insurance versus LTC. And personally, I support both of them. So I like to keep it, I'm not biased in one direction or the other, right? So the way that I look at it is this is for true long-term care planning. The life insurance with the LTC rider is if there's a life insurance need, which we can do either one of them. So as Elizabeth had mentioned, this amplifies the overall LTC portion of leverage, while it has a little bit of death benefit and then even some residual involvement as well. So People maybe heard before, live, die, or quit, right? And these types of policies, I think what people like about these the most is if you live, well, there's a long-term care pool of money available for you. If you die, there's a tax-free death benefit. If you quit, if you want to exit, there's some sort of liquidity feature depending on how you choose it. Some features can give you as much as all the money back within a 5-year period. A lot of the ones, in fact, this one that we're looking at doesn't have an exact full liquidity surrender, but it has a cash surrender value that starts at somewhere in the neighborhood of 40% and grows from 1 to 2% year over year to where a 55-year-old might be able to get all their money back out of it by the time she's 90, right? So it takes some time, but the point of it is there's an exit strategy involved with these. And then one step further I'll take it with these is that they're guaranteed premiums, right? Clients are familiar with, unfortunately, kind of the hazard part of traditional long-term care in the marketplace where they might be experiencing rate increases year over year on policies such as these. These are priced from the get-go at guaranteed rates. They, whether you choose a 100,000 single pay scenario we're looking at right now, or if somebody wants to space it out till they're 65 or even pay it to 100, we have flexibility to do that. We are contractually obligated to not modify that premium schedule in any way. That what they're guaranteed, what they're paying is what they're paying, which has been a big peace of mind on contracts such as this. So that's really what I wanted to just add into from kind of a technical part of it and some of the, a little bit of the features and whatnot. What I wanted to, I guess, Elizabeth, I can jump over. Does anybody have any questions?
You should be able to just take the share over from here.
Green button, share. Let's see. It says you cannot start screen share while the other participant is sharing.
Okay, so let me figure out how to stop sharing. How do I stop? Oh, this button. Here we go. All right, there you go. Now you should be able to take it.
Very good. Okay, and I can even change what screen I want. I've got a dual screen going on over here. Maybe I don't want that because now I'm not looking at the screen. I've got it over here. Can everybody see this? Can you see what I've got?
Yeah, your underwriting process is here.
Okay. Maybe I can do. Let's go back here. This might be a little easier for me actually. So, do you still have the underwriting processes in front of you?
Yep.
Okay. Very good. So. Pivoting from the features and benefits and everything from the product, again, the reason that we're bringing this up right now is really from an underwriting standpoint where we're looking at, and we'll get into a few other ones as well in a few minutes, but when Elizabeth and I were talking earlier this week, excuse me, even last week, of course, we're all in that situation of what are the carriers offering, what sort of flexibility of products that you have that are easy underwriting, that maybe they have modified features or no paramed, no physicals at all. And this is one of them, right? Carematters is a simplified underwriting process to where it's actually done with a telephone interview. So there's no APS, medicals, exams, none of that. What you can see from this is kind of our all-encompassing process guide. So I won't go through all 8 pages, but I can quickly kind of glance through for some of them for you. Step 1 shows everything from the application and submission side that's needed from your all's end, right? This is an e-app that can be done. So it's through iGo system, so iPipeline can be submitted through that way. It has all the state, it'll say there's 1035s involved, LTC personal worksheet, everything that we need necessary can see in step 1. Once the app is in-house and in good order on our end, all that's done is the client gets a telephone interview, ready to schedule it. It could be done as soon as the next day or whatever is convenient for the client schedule. Typically, these range from about 45 minutes to an hour. If they're over 55, there's a cognitive part of it to where they have to do like a word recall, some of that to make sure that they're mentally cognitive. Anything under 55, they don't have to. And actually, I take that back, it's 60. We changed that recently. So anything under 60, you do not have to do the cognitive impairment part of it. So typically, like I said, it's about 45 minutes. We have interview prep sheets that we hand out once the application is sent in as well. Really, it's just a big handout for the client to have with them. Treat it like an interview, such as almost we're doing like this, but without the camera on. I've had folks that have tried to go grocery shopping or do this, that, or the other, and multitasking while they're trying to do these interviews, it really doesn't go that well. So without doing a medical or going for doctor's records such as that, the only information that our underwriters get is what they do on this interview, as well as Part B and Part 2 of an application. So take it seriously, but again, it's a very easy, streamlined process to get a lot of leverage from a long-term care standpoint with a product such as this. So again, everything's done through a telephone interview. Within 2 to 3 days after that, we get our decision and we get the delivery requirements in. So it's a very streamlined, easy process, an easy application that we've had a lot of good success with this over the years. Any questions on that so far?
If people can, rather than unmuting and muting everyone a bunch of times, if you can just put your questions in the chat for now, that would help. You should be able to just type in here. We'll open up to questions, especially at the end once we turn off the recording and everything. I'll unmute everybody again.
So how much time do we have, Elizabeth?
Like 12 minutes or so.
Okay. So really that was the kind of the big part of the presentation that I wanted to go over. However, this kind of morphed a little bit because, like I said earlier, Elizabeth and I were kind of idea sharing and talking about, well, outside of just the long-term care realm, what else is Nationwide doing from an easy med, non-med or easy application underwriting process? Or the question that she posed to me is, what products do we have? And I'll answer the same, but I did for the group. Really, from Nationwide's perspective, outside of Carematters, it's not so much as a specific product. It's certain programs and processes that we're doing. So I think in some of the email or parts of the email we kind of given a precursor to some of this info. I'm going to switch it over to personally one of my favorite programs that we've actually been doing for a while. I think it's getting a lot more attention and sizzle right now with just the inability to be able to access medical records right now. And that's our term to perm program. So what really sticks out with this is it's exactly like it sounds like, right? A non-medical process to be non-fully underwritten process to be able to convert term business to permanent. We're not talking term conversions, however, because this is not specific to Nationwide term policies. This can be any carrier term policies that have been sold in the last 3 years that want to have permanent protection. So this overview goes into it. Really, we have a very small amount of carriers that we say are ineligible for it. And a lot of those, no disrespect to any of the carriers listed on there. They're not kind of some of your more top end brick and mortar firms. A lot of them, if somebody asks me about, Lincoln or Hancock or whomever it might be, yeah, we include a lot of the blue bloods on here. So anybody not listed on the ineligible list is obviously free game. This does have parameters up to 2.5 million. And it can go, you can see age ranges too, 18 to 65. And like I said, anything but earlier than the last 3 years. So really from an underwriting standpoint, we just have to have a full application come in, and we do our own internal check, right? MRV, MIB, pharmacy, and then if it warrants it, we might do a life financial supplement check with paperwork on that. Outside of that, really, it's a matching offer. So this has been like I said, a really good program for us to be able to offer. And I will say on top of that, we don't require the term insurance existing to be replaced. We can actually allow this to be in addition to. So somebody's got $1 million 20-year term with Hancock, right? We can offer the same face amount underwriting offer itself on a GUL or indexed, whatever it might be, and they can still keep the term policy.
Awesome, thank you.
Yep. The other programs that I want to talk about really is our own, we call it intelligent underwriting, right? It's every carrier has their own version of accelerated underwriting. We've got some pretty high favorable limits on this for us. You can see I've got kind of a map guide that'll show you how, kind of the timeline of how it works and everything. Applications submitted through an iPipeline. We'll do a client telephone interview that's typically about 20 minutes. And then we evaluate. We don't have any random holdouts or anything such as that. from there, we do our evaluation and hope that really anything standard or better is going, if they're tracking for that, they can qualify for an accelerated decision. We're now running at a time to where we see success stories like any carrier, to where if it gets in, it's clean and it's ready, we can get it in the same day within maybe hours or minutes sometimes, with an offer, and get the policy done. Obviously, anything that requires additional attention, that's a different story, right? If we have to go through a shortened medical exam, and working with the vendors to figure out how to get that. As everybody's, kind of gravitating towards this accelerated underwriting process, this has been a really big attraction for us, I would say, in the last week or so. Our guidelines, I'll scroll through it down here at the bottom. For anybody 18 to 50, we'll go up to 2 million on products. Really, every product is available for us. The only thing that's not included is survivorship, our survivorship IUL, and then Carematters. And Carematters is already, as we mentioned, a simplified underwritten product. So that's the only reason it's not included on that. It's already got its own process. So term, whole life, our IULs, GULs, et cetera, they're all included. Even our VULs are all included on this. As I mentioned, from a guideline limit perspective, we can go up to 2 million, all the way up to age 50. And then anything over 51 and up can be $1 million. And actually, this could be, I can get a little bit more information for you. I think we've actually changed some of this information. I think we've lifted our eligibility guidelines for the process with some of this, everything that's going on right now. We might even have some later ages. I know that the 2 million and 1 million, anything above 50 has stayed current, but we might even allow this to be past 60 now, but I can double check for you all to be certain. We're getting information day by day at this point from our underwriters.
Yeah. And I think they understand that too. We've been sending out varying updates on underwriting processes. And stuff, so.
Right. Exactly. The last thing I'll share with you all is really just an executive advantage program. This is for higher net worth clients that are doing their own or required through their own company to be having an annual physical. We can leverage that physical, and again, they can see there's dollar threshold amounts for executives ages 30 to 60 with an annual income of 150 or more. So from that, we can do best class, non-tobacco or tobacco preferred ratings. And again, the idea with this is more so focused on a telephone interview, but we're not doing any sort of medical records or APSs, right? If there's anything existing or an executive physical within the year, that's what we're trying to leverage for the underwriting offer. So Elizabeth and I were talking about this, right? When everyone kind of unhibernates from all of this, the fortunate or unfortunate reality for all of us in this business is people are going to realize that we're all mortal, right? We all need to do the planning. This is an opportunity for business owners primarily to realize that they have an opportunity to take advantage of some really fascinating underwriting opportunities inside of Nationwide or whatever carrier that might be, that can get them some quick, easy underwriting and get them some coverage while they might be needing it right now.
Yeah, and this is awesome for any of your business cases that, they are still coming up. There are still businesses that are operating. Zoom, for example, is one that's booming amidst everybody else having, chaos and things. So this is an awesome opportunity to be able to take advantage of for any business case that you might come across in the interim.
Yeah.
So, okay, Joe, you want me to switch back over to the...
Yeah. So I need to turn it off on my end, right?
Maybe. Do you want to continue? Yeah, I think I can just force you to stop sharing, which is kind of...
I stopped it.
I'm the hostess, so I get to do whatever I need to do.
You do what you want, right?
Yeah. Okay. So a call to action item. So on the, back to, again, the sales side of the conversation, is that a lot of people, I get requests for long-term care quotes and people I don't know what I need. How much coverage should I give them? Send me, the smallest quote for the cheapest price. And then, we rapidly realize that that's not going to protect the client very well. So what I've been really trying to do, especially with my advisors, and you could talk to your directors as you're, going through this process and stuff too, about getting the access to this form. This is literally just, you're looking at the whole thing. It's one page. The second page is literally just disclaimers. And this can be asked to the client over the phone. They can type into it. There's no signatures or anything. this form actually gets sent in to Nationwide, and we can send it in as your director at Elite. You can fill it in. Basically, whatever you complete up here is who they're going to report back to with this information. So, you know, if you put your email there, it's going to be you that gets the email back, or me, and then I forward it to you. With this information, they do a bunch of statistical analysis and help you get some answers as to how much coverage that client is going to need. And yes, I will send out this sheet afterwards. So I wanted to show you then too what the result is. So this is just an example. It's actually an example I had run for an advisor, but it's very generic, just Glenn and Amy here. They're both, they're a little younger, especially Amy, which is great. The younger the people are you're having the conversation with, the better off they are. Their money grows faster in these products, and obviously their health status ideally is a little bit better, so they tend to get better ratings and things. So they answered no to all the health questions. They're here in Texas. You know, they're saying their life expectancy based on their current age and retirement age and health statuses are 88 and 91, respectively. So what this report generates for you, the first part, and Joe, you can hop in here if you have any more detail to give here, but the first parts are about, oh, wait, is that right? Healthcare. Yeah, healthcare expenses. Sorry, I thought this skipped the healthcare. You can leave out the healthcare component if you don't want that.
Yep.
So the first part talks all about their healthcare costs in retirement, and you could include things like Part B and Med Sup, other stuff, and it'll give them a really good breakdown of what costs look like. And back to the conversation of if you're a financial advisor or you're working with their financial advisor to help come up with these plans, this is a really good resource for them to project, you know, okay, the family will have $120,000 of annual income at age 70, well, minus healthcare costs, expenses, different things like that. So this is a great resource to project those costs. But in terms of talking long-term care, you can go down then to the last page of the statistics, and this gives you an exact breakdown of each individual. So you have up here Glenn, and then Mary, of course, and based on their life expectancies, when the projection for care is to begin, so 88 for her, 85 for him, these are the costs based on their zip code that they provided, which was the Houston area in this example. So you can see, and you can help them work with the advisor, different things like that, and talk about a reality of what things could cost when they would need the care, especially as it pertains to each individual. So I always make sure that the clients understand, you know, if Glenn goes into care at 85, well, Amy is still, you know, utilizing assets, living in a home, needing to go grocery shopping, all of those things. So if he's needing $120,000 or $130,000 for an assisted living situation, well, where's any income left for Amy? So making sure that when you're working with those numbers that you at least fill the gap so they have that protection built into their product. We want to make sure that we're not just, you know, throwing wet paper at the wall. We want to have a proper target to make sure that we're getting them at least a minimum protection for their need. So this is a great resource. It's an action item for you. I'll send this out with a follow-up email to this call. I'll give you a sample copy, all the documentation that Joe and I have talked about, and then of course this fact finder for you to keep on hand, because like I said, it's a great resource and it really helps your client understand where numbers lie and what the possible, you know, risks are and things for protection. So that's about the gist of what we have for you here. I'm going to stop the recording and then we'll switch over to Q&A and stuff. So if you have any questions, email us. We're happy to help you here at Elite, and thanks for your time.